Consumer inflation remains light, so why aren't markets celebrating? February CPI is here. Overall consumer inflation rose 0.3% month over month and 2.4% over the past year, basically right in line with expectations. Core CPI, which investors care more about, was slightly lower at 0.2% for the month, with annual core inflation at 2.5%. So overall, another moderate inflation report, no major surprises, but markets didn't exactly celebrate. Stocks actually finished lower for the day, just slightly though. So why? Well, investors are likely more focused on the future. Crude oil has surged since the US struck Iran. While Monday saw some relief, prices have already climbed back to near where we left off last week. The most obvious impact will be gas prices and airline fares, but the bigger concern is transportation and logistics, which can eventually push prices higher across the entire economy. So what's next? First, we'll get January PCE on Friday. It's more backwards looking, but recent PCE readings have been running hotter than CPI even before the Iran conflict. Expectations are for another higher inflation reading. Then next Wednesday, we'll get PPI. Producer inflation has been running hotter than consumer as well, so investors will be watching closely to see if that trend continues. And Wednesday also brings the next Fed meeting. Markets will be focused on how the Fed views inflation and whether rising oil prices could complicate the rate cut outlook. Will the Fed continue signaling progress on inflation, or have recent events thrown a wrench into those rate cut plans? Lots on tap. Stay tuned.